past this line, a lot of professional traders jumped in. And then when it got repelled off of this triple top, a lot of them jumped out. And then it went back down and it retested that resistance as support. And it found support there and started going up. Some traders got back in, but a lot of them will wait until there's this confirmation. And so a lot of professional traders are now going back into the market because it takes about a 3% move past something, a strong resistance like a triple top, and you can consider it a breakout. Well, this is almost a 9% move. And so it's definitely a breakout that is confirmed.
Mike Maloney of goldsilver.com highlights significant recent developments in the silver market, indicating a confirmed breakout that has captured the attention of professional traders. This breakout began in March and has been solidified by surpassing key resistance levels. Traditionally overshadowed by gold, silver has often been called the poorer cousin of its shinier counterpart. However, silver has outperformed gold over the past 3 months, rising by 32% compared to gold's 20% return. Silver has emerged as one of the year's best-performing commodities so far. Maloney explains that silver retreated to test the former resistance line after reaching a triple top, successfully transitioning into a support level. This retest confirmed the support, and silver broke through the previous triple top resistance by nearly 9%. This substantial move is crucial, as professional traders typically look for a 3% move past significant resistance to validate a breakout. Supporting this technical analysis, silver has faced 4 consecutive years of market shortages, contributing to its bullish momentum. This demand deficit has further fueled the rally, positioning silver as a hot commodity. According to an FX Empire report, the longer-term outlook suggests that silver could reach as high as $50. Historically, when the market has broken above $30, it has attempted to get $50 before experiencing significant pullbacks. This volatility underscores the importance of cautious trading in the silver market. The booming photovoltaic industry, a critical sector in the global energy transition, essentially drives the shortage in the silver market. Dominated by China, the PV industry is now the largest consumer of silver, with an annual consumption of 232 million ounces. As the demand for renewable energy sources continues to rise, the demand for silver is expected to keep growing, pushing its prices higher. Maloney's insights underscore the increasing importance of silver in the commodities market. Join us as we delve into Mike Maloney's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Big news in silver. Technical analysis shows that the breakout that started back in March has been absolutely confirmed at this point. And this is really important because of the way professional traders trade. Now, there was a triple top that was far less than 1%. It was like less than 0.5% from each other. A triple top where the price went up and then was repelled at this resistance line, this green line. This big long-term trend line was the fundamental resistance that was broken back in March. It went up and made that triple top, and it got repelled at that resistance, which was a double top resistance back then. And it went back down and retested this trend line, and that resistance became support. Now it's gone up and it has broken this resistance here and the triple top by almost 9%. So this is very significant because of the way professional traders trade. This chart was posted by Mr. Yuppie. Gold, all-time high, check. Copper, all-time high, check. Silver, all-time high, X. Nowhere near the all-time high. But moving on, Lobo Tigre, my friend, says hot commodity silver sets pace as demand. This is from Yahoo Finance. Demand deficit spur rally. So we have had 4 consecutive years of shortages in the silver market, which brings me back to this confirmation. You've got this very strong resistance of this downtrend line that was tested. You know, you've got a couple of strikes here, and then it finally broke through in late March. It went up, and it went up to this triple top that had happened, and bounced off of that triple top. Well, when it passed this line, a lot of professional traders jumped in. And then when it got repelled off of this triple top, a lot of them jumped out. And then it went back down and it retested that resistance as support. And it found support there and started going up. Some traders got back in, but a lot of them will wait until there's this confirmation. And so a lot of professional traders are now going back into the market because it takes about a 3% move past something, a strong resistance like a triple top, and you can consider it a breakout. Well, this is almost a 9% move. And so it's definitely a breakout that is confirmed.
China and other BRICS countries have been offloading U.S. treasuries worth billions since 2022, with China recording its highest sales in the past 2 years. This development indicates a strategic shift by BRICS and other developing nations to move away from owning U.S. assets in their reserves, driven by concerns over the uncontrolled U.S. debt, which has reached $34.4 trillion. Maloney explains that China's recent sale of U.S. Treasury and agency debt has reached record levels, marking a significant financial maneuver, often referred to as the nuclear option, due to its potential to destabilize the U.S. economy. The latest financial actions involving the Chinese yuan and Russian ruble represent a massive step toward de-dollarization and promoting local currencies. Russia and China have been at the forefront of this alliance, setting a precedent for other BRICS nations to follow. Their strengthened relationship fosters greater collaboration within the bloc to reduce dependency on the U.S. dollar. MikeMaloney highlights that geopolitical tensions are exacerbating economic uncertainties. This is underscored by Russia's recent confiscation of 800 million euros in assets from Deutsche Bank, UniCredit, and Commerzbank as retaliation for Western sanctions. Such tit-for-tat strategies are contributing to the destabilization of the global economy. Let's get back to the interview.
China selling Treasury and U.S. agency debt rises to record levels. China just dumped the largest amount of U.S. Treasuries and agency debt in history. Probably fine. You know, we used to call this the nuclear option. Whenever tensions build between the United States and China, they've got so many treasuries that they can absolutely collapse our economy by just dumping them all on the market at the same time. However, global trade prevents war. This is very important. China does not want to ruin our economy because we are their biggest customer. Their economy does well when our economy is doing well. So as long as we can keep on buying stuff from them, their economy goes along just fine. They're in a trade surplus. We're printing we're typing the world's reserve currency into existence, and we get to buy stuff with it. That is causing us to have this consistent trade deficit that goes on for decade after decade. We're able to do that because we can pay our debts with the currency we create. But this is a bad sign, and when it comes to the global trade barriers and everything breaking down and the death of the global dollar standard that I've been tracking since 2008, 2009, Russia confiscates 800 million euros from worth of assets from Deutsche Bank, UniCredit, and Commerzbank. And they're doing this to get back at when the U.S. and the Western world seized and froze so many Russian assets. So this is a tit-for-tat thing, and it is bringing the world economy down. Right now, we're still in these bubbles. Things are going along. What could pop? The bubbles, all the bubbles. They're out there right now. China home prices. This is the biggest fall. This is close to 1% in just April. Just April. And so this is a consistent downtrend now going on for a few years, except for just 2 months of tiny little gains in home prices. The rest of it is all in the negative. And that is their largest single consumer investment sector is real estate. Capital gains hikes. I covered this a couple of videos ago, that raising capital gains to 44.6% could be one of the things that helps to pop the stock market bubble. The higher the tax is that you have to pay on any gains, first of all, you will have to beat inflation. Your investments have to go up 44.6% before you've gotten to a break-even point, when it comes to inflation.
Russia and China revealed a massive joint statement that deepened diplomatic relations between the two nations. Specifically, both leaders agreed to increase their comprehensive partnership and strategic cooperation. How might the ongoing de-dollarization efforts by BRICS nations impact global financial stability and the future of international trade? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.